Let's talk more about today's big sell-off and get some real-world advice. Joining us now is BTIG's Julian Emanuel. Now, Julian, to be fair, you've come on this program many times, and you said, I think we will have a pullback, and a pullback would be healthy. But was this what you were referring to?
So when you have days like today, within the context of the fact that we are 5% off the high, but we're only off the high in less than a week, you have to step back and you have to say, as has been the case throughout this bull market, 11 years of this, be prepared to be a buyer down 10 to 15%. You have been paid to be that way every single time. Now, if you are an investor and you are uncomfortable with your holdings now, particularly if you've got lots of profits in high-flying technology names that are up 50, 100% in the last year, you might think about trimming there. So to us, this is part of the sell-off. We think there's a bit more to go here.
Trimming even into this weakness, and how much more do you think there is to go?
So from our point of view, if you look at sort of the past episodes of what we would call a growth scare, essentially something like Ebola in 2014, Volmageddon, which we had in the first quarter of 2018, those were essentially sort of very almost straight line downs over the course of 2 to 3 weeks. Very, very scary, but ultimately buyable. Again, we don't know. We have no medical insight on what the progression of the coronavirus is. We just know, A, that the market has started to come off in a reasonably violent fashion, but we would have liked to have seen a little bit more capitulation today. And I would suggest that rather than sort of a reversal tomorrow, maybe look for a reversal on Wednesday instead, after the Democratic debate.
So, Julian, the capitulation in terms of the volatility index, the VIX, has come into form anywhere between 30 and 35 on maybe 3 different occasions over the last 2.5, 3 years. I think we closed at 25 today. Is that sort of what you're talking about?
Yeah, basically, we think that ultimately, if you're going to go down 10, we've talked about the 200-day moving average at around 30-40, 30-45 in the S&P 500. You're going to get to a number that's 30 or above, and that's the kind of, really almost healthy but short-term panic that we think is viable, given the fact that there's a lot of liquidity out there.
So, Julian, we talked about countries being weak before going to this, economies being weak. Is this a big enough shock for you to change any of your earnings numbers?
Not at the moment. And the reason that we say that is because, again, if you think about all the stimulus in the pipeline that China has, and granted, it really isn't effective right now because you can't stimulate when 500 million people are in an apartment. But the point is that we think that there is the potential for upward moves.